Yeah, so the next panel is probably one that I've been most curious to listen to about, if we go to the next thing, scan here, the update on central bank digital currency. So, looking forward to it. Yeah, come on up. Yeah. Thanks a lot.
All right. Got Craig making his way up too. Give him a minute to get comfortable. Wow, those lights are bright. All right. Well, I'm going to try and catch up a little bit on time here. My name is Brett Meekum. I'm the president of Cadmus Public Affairs. We're a government relations firm based in Phoenix, Arizona. We've got some clients in the fintech and technology space, and I was invited here to moderate the panel today. The panel we're going to be talking about is central bank digital currency, and since that's a mouthful, we're just going to call it CBDC for the rest of the presentation. It's really good to be back in person. I was able to host a similar panel on stablecoin last year, and my good friend Nitin Gar was on that panel last year. And the most shocking thing to me that came out of that panel was I was invited to host another panel. So, what the format we're going to go for is I'm going to ask these fine gentlemen questions, and the great thing about being a moderator is I get to ask the questions and not have to actually know the answers. So we're going to let them answer some great questions, and then what I'm going to try and do is reserve a few minutes of time at the end for your questions in the audience. However, if we're going down a topic that you've got a burning question on, feel free to raise your hand in the presentation. We'll try to get to you if it's something relevant to what these folks are all talking about. So, without further ado, let me introduce my blue ribbon panel up here. And I'm going to have you guys, I'm going to introduce you, and then they'll tell you a couple of quick things about themselves. So, we got Craig Boysovich, Director of the Enterprise Architecture Payments Canada. Wave, Craig. We've got Peter Tapling, Managing Director of PTAP Advisory LLC. And then as a surprise guest, who decided to jump on the panel again, we've got Nitin Gar. He's now Digital Assets and Technology Design with State Street Bank. So welcome all. All right, so we'll jump right into it as we only have a limited amount of time and the clock is ticking here. So question number one. So central bank digital currencies, or CBDCs, have become a buzzword in recent years with more than 100 countries researching and exploring the possibility of adoption of their own. Just in the past few weeks, Australia and Colombia have announced their interest in going down the path of CBDC. 10 countries have already begun the use, with Bermuda being the first and Jamaica being the most recent. So in your opinion, gentlemen, what do you see as the benefit of a CBDC to a sovereign nation? And Peter, why don't you lead us off on that?
Yeah, this is the question of why, right?
Absolutely a question of why.
Sovereign entities create fiat currencies for two reasons. One is they want to be able to encourage commerce within their realm, whatever that is. In the United States, that's interstate commerce. The other one is they want to have some measure of control over the economy. And so if you think about consumer demand for digital currencies, at their peak, digital currencies held a value of roughly $2 trillion. And on the balance sheet of the Federal Reserve, all of the cash in circulation is about $2.1 trillion. And so if one of the objectives of a fiat currency is to be able to control the economy, they cannot exhibit any control over values that are held outside of something that the central banking authority controls. And so, one of the reasons for wanting to do a central bank digital currency is that if indeed there are beneficial characteristics of digital currencies that the money consuming public would like to have, the central bank would like those to come through the central bank as opposed to through third parties. There's a second one that I won't dive into now, but the way we do payments today is fundamentally disconnected with internet commerce as is popular today, and it's way disconnected from Web3. Like if your kids play Fortnite and they've had to buy anything, they didn't buy anything with $1. You had to take $1 out of circulation and put it into the Fortnite ecosystem. And so one of the benefits of a central bank digital currency is to be able to make these digital movements of money native to the currency.
Yeah, I will add to what Peter mentioned is you have different motivations. I think if you look at the emerging economy, one of the factors, and I back in the day when I was at IBM, we delivered about 19 CBDC projects around the world, and we found that economic inclusion was some of the agendas they had to address, and that came with transparency, and they had underlying agenda in terms of tax evasion and giving sort of the system a full visibility in terms of the synergy value of money, right? Second thing was the distribution was quite expensive in some countries. This is, again, if you look at hyperinflationary environments, and if you look at environments where the cost of printing, distributing, and keeping track of money was quite expensive, and CBDC became a natural sort of a tech solution to be able to solve that problem. Third thing, which was interesting in most of Western Hemisphere, is that let's drive the CBDC agenda mostly for payment efficiencies in, let's say, capital markets, for instance, but more towards the fact that, hey, we feel that we are being threatened with crypto and digital assets, Bitcoin, for instance, and CBDC becomes an answer to solve the issue of real-time or near real-time instant payment systems. So you have different motivations, I would say, depending on which country you're in. Actually, I have a whole table that talks about which country and their paper and their academic sort of involvement in terms of why a country is taking the path of CBDC. It all differs from region to region, for instance.
Craig?
Yeah, I would agree. I mean, obviously, every country has a variety of different motivations. But I think, from a central banking perspective, one of the main reasons is that they're looking for deeper insights in economic activity to understand where there are hot spots and cold spots. And so your kind of fiat currency becomes a blind spot because you don't necessarily know what a lot of the transactions are when people are just trading cash for goods and services, and you lose insight into a lot of that activity without going into extraneous reporting, and it tends to be sampling, it tends to be out-of-band reporting. So it's to get that broader context of the overall economic activity.
Sure, and just any of you guys jump in on this quick follow-up. Where do you guys see, obviously there's a discussion between wholesale benefit of a CBDC versus an actual retail benefit. For a retail citizen of a country that a country is engaging in CBDC, what's the benefit to that retail user?
So most countries are looking at sort of both sides of that coin. Do we do a wholesale currency, which means that it's really just facilitating money moving from the central bank to all of the key direct banks in that economy, versus a retail CBDC, which is going to be used by people and businesses for transactions. And I think that's where most people find that the benefit is that it should make transactions easier. It's definitely going to be full real-time transactions with a central bank digital currency because it's wallet to wallet to a centralized ledger. And the other benefit, again, is just the deeper insight of economic activity.
And I had to work with Colombia, I think about 7 years back, and the intention was disbursement. So many of these countries require government distribution to go into the fringes of society, of the citizens. And they were trying to understand as to the middleman and the banking infrastructure that wasn't there. It became quite difficult, right? And they were relying upon something like a CBDC, retail CBDC. Of course, there have been studies after studies after studies. I think two-tier model, which is basically central banks themselves not being involved with retail directly, but going through a financial intermediary like a bank to distribute those funds, because mobile devices have penetrated the entire ecosystem. Everybody has a mobile device. So you begin to see retail less, quote unquote, for buying and selling per se. This is M-Pesa to the nth degree, is the last mile problem in solving that issue. Though I think that between retail and wholesale, and this is Nitin's perspective for that matter, is that I think wholesale actually has much longer legs in terms of solving the real problems than retail per se, because we have enough solutions in retail for the last mile problem, I think.
And I think that one, kind of bridging a little bit beyond your question, but
Sure.
One of the things that always frustrates me when we have the CBDC conversation is people on one side of the conversation will take every feature that they've ever heard that exists in any digital currency and think that a central bank digital currency will have all of them.
Yep.
And I can guarantee you that's not going to happen. the first thing that's going to happen is a policy discussion within the sovereign realm, whether it's Colombia or Canada or the United States or Zaire, on what is it that we want this currency, what problems do we want this to solve, right? Because you asked directly, the question was, well, what's the benefit to a retail consumer? And the nice consultant answer is, it depends, right? It depends what you think you want the thing to do. If you want the thing to be able to foster some level of financial inclusion, bring financial services to those that are traditionally unbanked, that's one set of features and characteristics in the ecosystem. If you want to track people so that you're sure that they're paying their taxes, that's another thing that's a feature in the system. If you want to, as we would in the United States, not have the government track individual transactions, well, that kind of is contrary to the track individual transactions for taxing. And so, again, it's a long way around the answer, but it really does depend, and it's more of a policy question than a technology question. The technology can probably do it. The policymakers have to decide what they want it to do.
And you've made a couple of good points, especially on privacy and government control and so forth. And, Colombia has cited one of the reasons they're pursuing CBDC is to ensure its citizenry will pay its proper taxes. So under these CBDC schemes, in your guys' view, how can privacy be protected and preserved as different countries move down this route?
So privacy can be protected in a number of ways through encryption and other sorts of things. So you can have one extreme where the exchange of all the transactions are basically a public record, which I don't think is necessarily what anybody would want. Versus you can have a completely encrypted ledger where portions of that ledger could be opened up or investigated with proper authority in order to get the keys to unlock those transactions. So you can sort of have at the two extremes. I don't think you'd have an nth extreme where all transactions are locked forever and unreadable other than by the users that made them.
And I'll make a comment on this, right? We've been looking at DLT space, blockchain space, for over a decade in terms of privacy preservation. We looked at families of zero-knowledge proof technologies to protect privacy of individuals, to ensure that I may not know who you are, but we have enough integrity in transactions that we can send the money that we have and not send the money we don't have. And I think the recent thing that we heard of Tornado Cash and the sanctions, I think it's less about the tech element. I think it's more about the systemic characteristics that we built. So while we may want to have privacy with anything that's digital, it's increasingly difficult to have privacy, except the fact that everything is trackable and traceable. That's some of the inherent characteristics of the DLT and many of the tokenized form of fiat that we try to move on with. So I think there's a little, it's an interesting moment in our time at the moment that we are trying to get the same characteristic of what we have with cash and try to implement it in digital form. I think that form factor should be a little bit more different. The peer-to-peer maybe not, but there's always a systemic view of who's transacting with whom, like we've seen that with crypto space. So a little bit more involved conversation, I would say.
Yeah, and like I said, it really depends on what the sovereign entity that's coming out with the CBDC wants. Like, what does its citizenry want? By the way, we have to understand what we're comparing it against. Sure. People talk about, well, Bitcoin is totally anonymous. No, it's not, right? After the Continental breach, the FBI recovered $4 million worth of Bitcoin because they were able to track the transaction. So we have to understand what the objective is. What is it that we want relative to, privacy? And then again, what are the features that we're going to offer? Can't remember the country, but I read an article where one country is saying basically under a certain dollar amount, all the CBDC transactions are anonymous.
That's Europe.
That's
the MICA has.
It's going to be anonymous. So if you want to tip somebody, if you want to put $5 in the bucket for the homeless person, scan a QR code, boom, the money moves. It's anonymous. Very cash-like, right? And they're trying to, what we're always trying to avoid in financial services is big anti-money laundering problems, right? We don't want to enable an easy way for millions and hundreds of millions of dollars to move to the bad guys.
Can I make a comment on this? Like for CBDC projects, right? If you look at the entire gamut of 80%, which is what BIS mentioned, like 80, and now it's 90% of world's central banks are looking at us on CBDC. At least in my opinion, looking at CBDC projects, you need to have digital identity projects. You cannot implement a central bank digital currency project till you don't have a digital ID system in place. And you can see the contradiction there, that for me to be able to implement a digital ID, which means it's verified individuals who will eventually have access to wallets and other digital form of transactions, you want to have an anonymous instrument tied to a known entity. And that's where things become a little bit more murky, in my opinion, where eventually your phone is an identified object. Whether you transact between peer-to-peer, your phone is still the identifying element.
Great answers, guys, by the way. And moving on, who do you think, in your opinion, who's doing CBDC right now in the world, and why? What is it about their approach to it that you think is the right approach?
No one.
No.
I was looking over there. Okay, it's over to you.
It's a huge experiment. Pardon? Yeah. Yeah. So I think I go back to first principles approach, knowing what we know and what we want to achieve with digital currency per se. Are we simply using it as a payment instrument? Are we, or are we, and I have a session after this, which I'll talk more about in terms of, today we know a digital asset or fungible asset, which is fiat. But the world in digital asset with NFTs and all that's happening is you have many fungible assets in the system. So the act of paying for something will drastically shift over time. The question is what we want to achieve with this. And I think that what we see with QA and QT and all the amount of energy, time, money, people, processes that we expend in payment systems per se, should we streamline that for much more digital engagement? That to me is a bigger issue than we solve for privacy and other elements, which is non-functional requirement at some point. Should we not create a system which allows me to be able to move money like I move my emails? Should I not, with accountability, of course, with non-repudiation, of course. That's the bigger agenda I would like to solve, is systemically be able to do that, and then eventually have layering of what we want to achieve at a bookend level, which is a country A wants to do this, country B wants to do this. I have the right infrastructure to achieve that. I'll leave it at that for now.
Yeah, I would just add, I think there's some interesting features in certain countries' implementations from what we've seen in the initial, 8 or 10 countries that have actually launched something. But I don't think we've seen a perfect solution as yet, and we're hopefully, there's a lot of calories being burned by 100 countries to get to a variety of different solutions. So I think we're going to see, sort of better and better implementations as we move forward.
My snarky answer is the people who are doing it right are the people who are watching right now and not doing anything.
Sure.
Because they're going to learn.
That is such an American statement to make. But my point is, I think Canada, Jasper has been a great experiment. You've gone through 4 or 5 phases, and I think that's just been a perfect experiment. Let's experiment and do things. We should always do things. Right. Sitting on the sidelines is never a right approach, I think.
I told you it was snarky.
Well, that kind of transitions to my next question. Of the G7 nations, the United States and the United Kingdom seem to be lagging behind. What are your guys' thoughts on this lag? Does the United States and UK need to catch up? Do they have to? And is there benefits and drawbacks of not being on the forefront of this?
So I think we have a good reason. As an American and as looking into the systems that we've designed over time, we are a global reserve currency. The risk of our world dominance in terms of what we do and the hegemony, that the US dollar has, and US dollar as the reserve currency of the world, we cannot take reckless steps, because it has a global impact to it, exactly how any inflationary element in the US is exported to other countries. That aside, I think we also have burden of legacy, right? We have all these biggest capital markets in the world, so we have to ensure that it's not just about digitizing fiat, it's about the ripple effect of that in terms of impact of real-time payments on T plus X, whatever that may be in capital markets versus the real-time payment elements. So I think to us, it's a domino effect that we have to not just fix payments, we have to fix other systems that are adjunct to payment systems per se. And I think other countries who have made this progress may not have the same burden that we have. And I think that's where things are, which I agree with you in that respect, that we are studying these things, that you have to understand the risk, study the risk, and then implement a solution that's meaningful and amenable to coexistence with existing systems, I think. I'll stop here.
Yeah, I think, Canada started Project Jasper back in 2015, 2016 timeframe. There was several phases looking at a variety of different things. We had a lot of observers and partners from the UK, the US, the EU, Singapore, and a number of other countries that kind of helped and participated in some of the stuff that we developed. So they have had, kind of the inside track on a lot of the research and development pieces that have been going on. And like Nitin said, the US has that one global reserve currency feature that no other country has to deal with, and that's why you would want the U.S. to be the most careful about what they put forward.
Yeah. I mean, so if I open up take the cover off my crystal ball, personally, do I think the U.S. should have a CBDC? Yes. Do I think they will? Probability 0.9. I think we will eventually. When? It's going to be a while, right? If you look at the time frame for FedNow, we went through the will we or won't we period of time. Then that took 5 years. Then they put out a Federal Register notice. That took 2 years. Then they said, yes, we're going to do it. And then development took 5 years. So the whole thing is 12 years, right? And so we're in the will we or won't we phase right now with central bank digital currency. To Craig's point, I think the earliest Federal Reserve paper I read on digital currencies was dated 2012. Yeah. So to say that we're not doing anything is just not true. As a central bank, the Federal Reserve has been looking at digital currencies, how they affect payments, how they affect the payment system stability, financial system stability, participating in the World Bank, the Bank for International Settlements, the whole alphabet soup of organizations globally who are looking at these things. So, I do think that the larger, directly to your question, Brett, I do think that the larger, more systemically important, we have globally systemic banks, we also have globally systemic central banks, and those will necessarily move a little bit slower.
I think I saw a hand back there, ma'am.
Yeah.
You just said that this is not digitization of a fiat currency. How should we think about this? How is it different to, say, e-money or electronic money?
Yeah. No, that's a brilliant question. I actually wrote a paper on this topic citing shift from digitization to tokenization. And what we have today in various aspects of virtual currencies and digital currencies, the digitization aspect of it. So the your Apple Pay is digitization. The fundamental constructs of how we manage accounts and how we move money has not changed, except we digitized the whole element. And that has created gaps because you have all these competing standards, and whatever we do in a domestic system, so even if CBDC is a domestic system, you still don't solve the global movement of money because it's still tied to the accounting constructs of a nation and the banks in that nation and the financial institution that work with those banks. And the way I'm looking at this perspective from shift from digitization to tokenization point of view is that tokenization gives you that universal understanding exactly how you would take a US dollar or euro, go to a country and exchange it. You have intermediaries involved, but they recognize the characteristic of a token or of a fiat bill, per se. We want to get to the realm where we understand the seamless movement of these tokens and fractions of these tokens that become the sum total of the whole. And that, one, negates the entire accounting process, negates the entire element of connecting these different rails that are domestically there. It creates one single global system, which I think has a lot of impact on global movement of money with velocity and supply, if that makes sense.
I think there was a hand back there too on this.
Does that make sense?
Yeah. Well, first I want to give my answer to your question. The difference is that in a digital coin, the bits themselves are the money. So that you can pay from phone to phone without an intermediary. All the other payments are account-based. So that's a fundamental difference. But mainly, I want to challenge the panel. There is one small company, Bitmint, that I think does it right. The problem is that the people who recognized us the most are the Chinese, and the PBOC is bought our technology, the Bank of Shanghai is using it, and it's not speculative, it's one-on-one with the yuan, or it will be with the dollar. It offers privacy and enables two people to pay each other cash-like without even identifying themselves one to the other. At the same time, we have the provisions under court order to crack this privacy. So it has the framework for something that could be a solution that will come faster than many expect. We are now competing on the G20, we are shortlisted, and we are not the only one. There are quite a few that are doing something completely non-speculative and also quantum resistant to the expected attack of quantum computers.
Cool. Is the company BitMe?
Bitmint.
Bitmint, okay.
BITMINT.
I was going to crack at BitMe. It's an interesting name, but
Then, thanks for those comments. All right, we have a few minutes left. I want to get to some more audience questions, but I've got a couple of quick questions for the panel.
One over here.
Did you?
So, like the government, whoever, is trying to say now that Bitcoin and Ethereum, they want to regulate them as commodities.
yeah.
So is that the government more or less taking action to kind of crush?
I wouldn't say the whole regulatory landscape. The regulatory issues around digital currencies have existed since digital currencies existed. Okay, and the alphabet soup of regulators have all kind of had soft touch opinions on what to do with some of these things. You know, back in 2017, hippest thing to do was to do an ICO and raise $1 billion. And 2018, because the SEC said it was an asset and you had to register it, all of a sudden couldn't do that anymore. I think there was a presidential executive order that came out earlier in the year. It had 6 things in it. One of the things that was in it was work together to quickly drive regulatory clarity. And if you speak with the executives at a lot of the primary cryptocurrency platforms, this is everything from the trading platforms like Coinbase and Kraken through the USDC, stablecoin. They want that. They would like to have regulatory clarity so that they know what the guardrails are and where they can operate. So I don't think that's a move. Don't know what you guys think. We
No,
talk
it's a
about
long
this, but
conversation. We have
I don't
4
think
minutes.
I don't think it's the government
I've
trying
had
to crush.
thousands of hours with various, and they say when you say government, whoever it is, it's for the people, by the people, right? In the sense that we have to participate. And if you're thinking that the government is doing something that we are not able to have control over, then crypto is 10x of our participation that's needed for us to work in that space. So participation is a big component of this industry per se, I would say. But we should take this offline because it's a long conversation in terms of commodity versus payment versus security, and they all have their definition, and we are using the lens of 1939, 1940, whereas the world has moved on in terms of a clear-cut definition of what these things are. I'll stop there.
Yeah.
It definitely scared people because
Sure.
they made the announcement all crazy.
Yeah, but price is not the indication of value at all times.
Well, and did you want to make a quick
Well, I was
comment?
going to say, part of it also just drives the perceptions of it, right? So you're rebranding a cryptocurrency into a crypto commodity, and it stops people from thinking about it as a transactional medium.
And that question was actually a great segue into my the next question anyway, which is I wanted to talk a little bit about El Salvador, which has gone a different direction than CBDC. They've made Bitcoin legal
Bitcoin
tender.
Beach, baby.
So what's the panel's thoughts on the El Salvador approach? Is it something that's workable? Is it not workable? Are there some pros or cons to that approach versus the CBDC approach?
Yeah, I've been to El Salvador to study this per se. It's a really badly implemented system. I think a big part of adopting a cryptocurrency as a payment instrument or as a legal tender completely negates the need of digital penetration. You need to have people who understand the complexity of, even for many of us, even for me who's been in this space for a long time, the private key, public key, and managing the entire infrastructure to do something with the crypto assets. And to go and just hand it off to, masses who are, at the fringes of the society, I think is badly managed and governed. It's a bold step, but they have less to lose with 625 million as the GDP. It's a blip, and from impact perspective, because lion's share of their source of revenue is coming from as remittances coming from the United States. I think they should think through this a little bit more because it impacts people, it impacts citizens and their lives.
And the wallet thing brings up a good point. Raise your hand if you have a self-custody cryptocurrency wallet, right? So actually a lot, maybe 15% of the people. So in a self-custody
Coinbase is not self-custody, just letting you know.
Yeah, Coinbase
you have
is
a
not
wallet, you have an
self-custody.
app. Just joking.
But the bottom line is the whole public key, private key thing becomes really important. The good news about all this cryptography is it really works, meaning, you can't break it, at least not now. We'll get into the crypto conversation later. what does that mean from a customer service perspective? You take the owner of the local bodega who's been taking all these Bitcoin payments and then they forget their password. How do they get their money back? Answer is they don't. There's literally no way to get it back. And so these are areas where, again, maybe that's some of what you were thinking about when you said it was poorly implemented, but to say, hey, we're gonna take digital wallets and we're gonna give them to the populace doesn't know what that means yet. I'm not claiming that the populace is too stupid to understand it. What I'm claiming is it's gonna take some time to get them to understand their responsibilities.
Yeah, there's zero consumer protection in the cryptocurrency world, so it's a challenge to use as a day-to-day currency in any. But I bought my vacation property in El Salvador anyways. So it's all
That's awesome. That's fantastic.
All right.
Hopefully you bought it when Bitcoin was high.
Well, our time's winding down, so I want to get real quickly final thoughts on CBDCs from each of you real quick, and then hopefully can field a couple more audience questions.
All right. When you think about what a central bank digital currency could do, think about some of the capabilities. Remember, not all of the capabilities, but some of the capabilities of digital currencies. The real-time nature, the borderless nature, the programmability capabilities. Those can have beneficial characteristics in the movement of value.
Yeah, I would use the term, one single term, as digital fiat that encompasses CBDCs, stablecoins, digital payment instruments as one sort of umbrella term, and having competing options is always good for the consumers, for us to choose between what's right, what's cheap, what's fast, and so on and so forth.
Yeah, I think, my last thought would be that, a lot of the things that are probably coming in the central bank digital currency space are a lot of stuff that we haven't seen. You mentioned BitMint. There's a lot of things that are coming that are not blockchain-based or digital or distributed ledger-based type stuff. Bundesbank has published a number of papers on pure cryptography-based solutions. Both Canada and the US have engaged with MIT to do a greenfield technology-agnostic development solution around central bank digital currency delivery, which likely is not going to have a blockchain-style implementation at the heart of it as well. So we have a lot of stuff yet to see on how implementations can happen. So we should stay tuned.
And my next startup is going to be Bite Me. That's going to be the next startup.
Do we have a...
Do you have any trademark?
So what about carbon credits and cryptocurrency?
What about it?
Are you familiar?
I'm very familiar with it. We did this in Wyoming. And I think two things are. One is any characteristics of any currency, unit of exchange, unit of account, and store of value. And so the question then becomes, is carbon credit itself? I always ask myself, what gives token its value? And you should ask yourself too. There are 200,000 plus tokens, 15,000 plus tradable tokens. What gives it its value? And the notion of carbon credits only makes sense, one, if it's recognized and if it's capturing some value, right? In the sense that if it's me issuing token and saying, hey, here's the carbon token, I'm going to take the money and plant trees, but at some point the economic model is going to break. And what industry has been doing is calling it tokenized carbon credits, but you still have a fungible entity, whether it's traditional fiat or payment rails to pay for these things. There's a little disconnect in terms of the intent of where the industry is heading today. There are a handful of good projects who are trying to tie this with what actually is happening in the world, but happy to take it offline and discuss that with you.
I think landfills extinct. So we are actually recognized by the United States Environmental Protection Agency and the United Nations. We actually have some protocols that have been issued to us from the United Nations.
Right.
So we're able to do business on a global scale. And what we do is we're going to tokenize the landfills. So we tokenize the landfill and we sell the tokens.
Yeah.
And that pays for our aerobic landfill bioreactor system to be built. About $20 million per landfill.
Got it. So I spent a year on waste management as a part of IBM's whole thing. The only way to eliminate landfills is not consume. Tokenization doesn't solve those physical. Eliminate usage, which means that you refuse to
Actually,
use.
the most harmful thing to our planet is deforestation, farming, overpopulation.
I'm getting kind of the signal to keep these guys on calendar here, but I mean, if you want to, if the two of you want to get together right after this, but
Several tokens we're doing.
but I really want to thank Craig, Nitin, and Peter for this robust discussion again. Again, three guys who are smarter than me. Please give them a big round of applause.